So in this video, I'm going to be going over the essentials of how to pitch a stock. This should be of particular interest to people interested in going in finance, especially into roles that are closer along the lines of equity research or maybe even investment banking. So this video, I'm just going to break it down how you should pitch a stock for quiz competitions and even for interviews and such. So in this video, I won't be writing anything on the board. It'll just be me sort of more lecture style. Just so I'll quickly go over what it takes or what pieces are needed to make a stock pitch. So before we start the stock pitch, it's basically essential to understand why you're pitching the stock in the first place. So essentially, behind every stock pitch is this idea that a company that you're pitching, and I'll assume that we're pitching along here, is that a company that is trading in the market, let's say it's trading at $50, the idea behind a stock pitch is that the company's intrinsic value, what it's actually worth, is higher than what it's actually being traded at, and that's why purchasing this company and waiting for the stock price to appreciate would be a good choice for an investor. So here we'll get started on the different steps that are required for the stock pitch. So first and foremost, you need to give a company overview. So this, you can basically explain what your company is, what it does, what its business model is, and essentially go over for a person who's never heard of the company, and you'll come into the situation quite often where the investor actually hasn't heard of the company. So explain what the company is, what they do, who their competitors are, and all that good stuff, just to make sure that the investor has an idea of what the company actually does. So the next part should usually be something of a competitive analysis, both internal and external. So it's always good to include a slide where you sort of go over internal and external factors affecting the company. So externally, you could talk about their competitors and market share that the company has. And in terms of internal things, you could definitely talk about different things going on within the company, whether they've launched a new product line, a new product brand, anything that sort of gives a holistic exposure to how the company is doing within itself, within the company, and within the broader marketplace. So next is the actual investment thesis, and here's where you can actually start into getting into why you're pitching the stock, why you're basically there, and why you think this would be a good investment. So usually for the stock pitches that I've done, I come up with a multi-point investment thesis. So I'll go over 2 to 3 factors for why I think this company is a good buy, or why I think buying it right now would be a good opportunity. And just at this point, I'd like to mention in the description below, if you're watching this video through my website, I'll link the actual stock pitches that I've done in the past, just to sort of give you an idea of things that I cover. So they'll be down in the description for your viewing pleasure. So over here in the investment thesis, you'll go over why you think this company is a good fit. So, and why the market has mispriced it. So for one of the pitches I did, it was a textile company known as Interface Incorporated, and my investment thesis was that the company's mispriced it because it missed 2 quarters of earnings, but that was because of one-time events, or the fact that the company actually is expanding into newer and broader markets, which is going to bring in massive revenues for them, or the fact that the company's actually implemented a 3-year cost-saving program, which is drastically going to improve its margins. So as you can see, all 3 of these sort of indicate why this company is going to be a really good investment moving forward. So that's sort of what you have to mention in your investment thesis. Next, you can sort of go over the macro and microeconomic trends that are affecting your company. So in terms of macro trends, you can talk about pretty much anything as long as it sort of affects the broader market. So you could talk about things like where the economy is headed, talk about interest rates, talk about political influences that the company might have. So in one of the pitches I did, my company talked about the fact that interest rates are sort of in a more volatile position than ever before, and the company that we were pitching had copious amounts of debt through a syndicated credit facility. So any change in interest rates could definitely affect their financial burdens in terms of interest payments they would have to make. So definitely do a lot of research on that and mention these points within the micro and macroeconomic trend section. Next, you can actually get into sort of the heart of the stock pitch, which is the valuation. So here you can use the traditional methods of valuation. So it's always best to do a DCF, essential to do comparables methods, and in some situations you can even do a precedent transaction. So this is basically a thing of going through the company's MD&A, their management discussions, their 10Qs, pulling out all that financial data, and basically building out your own model, making all those assumptions. And I'll make a separate video video on how to actually do a DCF. And in terms of comps, you can sort of look at comparable companies, and this sort of ties back into their external factors. So look at all of its closest competitors that have similar market share, and definitely talk about how key multiples within those companies, so PE, EV over EBITDA, are just two the main ones that come to mind, and any industry-specific multiples that you think are essential for valuing the company are really good to mention here as well. And finally, it's always important to mention the risks and catalysts of the company that you're pitching. So in the risk section, you sort of, the narrative of your stock pitch is why this company is going to do really well, and in the risk section, it's always important to mention what could possibly go wrong with that narrative, or what could possibly go wrong or cause the stock price to fall. Let's say if you're pitching a long. So in one of the pitches I did, it was pitching a long company for a textile company for a long, and one of the risks we had was that it might just not be able to compete with, as it expands into newer markets, it won't be able to compete with low-cost manufacturing that are already present in other countries. And similar risks could be, you could even look at some macroeconomic trends that if interest rates start rising and a company has a lot of debt, that could put your company's cash flows in jeopardy, and things like that, going over a worst case scenario of what could go wrong. In the catalyst section, it's a bit different. You want to focus on specific things that are going to make this stock rise in price. And the difference between basically catalyst and your investment thesis is usually sort of a blurred area for most people. So investment thesis is why your company is going to do well in the future. But there's no guarantee that the market would suddenly realize that the company is actually undervalued and sort of adjust its price. That company could stay undervalued for 10 years, 15 years, 20 years. So a catalyst is any sort of specific thing that could boost the event that you're predicting. So if you're predicting the stock price will rise, a catalyst is any sort of short-term event that will make sure that that happens. And finally, just to end off your pitch, it's always important to give an implied share price and the upside. So if you're pitching a stock at $20 and you expect it to go up to $40, you should say current price 20, expected price 40, and sort of your implied upside in terms of a percentage. And it's always good to, and this is sort of an after point, after you've done your conclusion, it's always best to go over some of the appendices that you made. So if you built out, let's say, a cash flow statement, income statement, balance sheet, it's always good to list that in the appendix, because if you're doing competitions, judges will definitely want to know where you got your numbers from. So this is sort of my video on how to pitch a stock. Feel free to leave your comments below. I'm always happy to answer any questions. Like I mentioned before, I've left a link below in the description for stock pitch that I recently did for a club known as ASIC. Feel free to check it out, and yeah.